The surplus is the largest since May of 2022, and notably, Canada's trade surplus with the U.S. widened to a record $14.4 billion. For more on all of this, let's go to Tony Stillo. He's Director of Canada Economics at Oxford Economics. Thanks for joining us today.
Thank you for inviting me.
So this kind of information, although it's good for us, it keeps us on the U.S. target list. So what happened in January that we saw this bump?
Well, I think you identified it and summarized it quite well. We saw exports just take off, and they've been doing that for a few months now. And it looks like pretty clearly that firms are preempting the potential tariffs that are likely to hit, and you can hear every day different news from Trump, but they're trying to get ahead of that and avoid those additional costs. And so they're building up their inventories in the U.S., both in the U.S. and Canada, but the U.S. firms doing so even at a faster clip.
Okay, so what kinds of things were being sent abroad that got a bump, I guess, last month?
Well, it's autos, trucks, industrial machinery, consumer goods. It basically was the gamut because Trump has threatened sweeping tariffs. I know most recently, and again, it's a moving target with President Trump, but he had first talked about sweeping tariffs on all our goods being shipped from Canada to the U.S. Now he's exempted transportation equipment for a while, and yet you're seeing firms just load up on a whole suite of goods coming from Canada.
Okay, so, we're in the early days of the month. Donald Trump's team has decided now that the tariffs will not apply to anything that is already in the existing trade deal and goes back and forth across the border. I mean, if you are a producer of goods in this country, are you now thinking, okay, now I have another month that I should beef up my production and get things out the door because now the tariff threat is in April?
Well, the tariff threat has moved to April. We have been surprised that he did something in March because he's using the Emergency Economic Powers Act in the U.S. for a national emergency, and there isn't one between Canada and the U.S. And we're not surprised now that he's moved it, but it's a moving target with him, highly fluid, highly unpredictable. You mentioned that Canada is being spared any goods and traded under the USMCA. Well, that's not clear yet. We're expecting that. Mexico has gotten that, but Trump's playing hardball with Canada, but we expect to see that as well. That
Actually, he just to let you know, there has been confirmation from Washington.
It's confirmed.
Yes, it was just a short time ago. But again, we talk about the devil being in the details, and some of that's still rolling out.
Exactly. And that's what we're trying to do as forecasters, and businesses are doing the same thing. How do we plan? What's our contingency for these potential tariffs? And it is quite a fluid situation, and firms are taking preemptive measures to get basically enough capacity to sell and keep selling at a reduced cost. But it is tough. It's tough to plan. That uncertainty alone, we think, is reducing investment. It's hurting hiring plans by businesses. We see the housing market in Canada. People are worried about their jobs, their income security, and so the uncertainty alone is having quite a dramatic impact already.
Can you expand a little bit more on the ability for some of these businesses to deal with all of this? Because we talked about the fact that, okay, so they're going to try and push more out the door in January. Now they might try and do that again because we've got a delayed or at least a bit of a reprieve of a month. But what falls into that ability? How do they try to manage the situation, and how difficult is it? Does it cost them a lot just to try and pivot?
Oh, it does. They're obviously doing the calculation. It costs them less than waiting, because you think about a 25% tariff on anything imported from Canada. If they can shore up and build up those inventories now and sell those at basically a reduced cost to what would be otherwise the case, it is definitely advantageous. And every firm is doing that calculation on their own, and you can see it's widespread across the U.S. economy that this is happening. And so there is a cost, though. You're having to store those inventories. You're perhaps having to finance them ahead of time. So there is definitely a cost up front. But clearly the calculation that it's the best move to make at this point.
I was going to say, you have to have space for your inventory as well. So there might not be an immediate demand, which means you've got to store your goods.
That's exactly right.
Yeah. So is there more talk amongst people about diversification? I mean, I know it's a general topic at a higher level. I'm just talking about at a lower level. Are people saying, yes, we need to diversify and stop looking at that American market? And is that, remotely easy to do?
Well, that's the key question. It is something that everyone's wanted to do. I've been in this business a long time. We've tried to diversify. It's quite a draw to have the largest market in the world just south of us. And we had the free trade agreement. We got the benefits of that. This is the cost side of it. We've got all our eggs in one basket. And now it's come to roost because we have a president in the United States that's taken a pretty negative approach to one of his largest trading partners. So yes, there's going to be a move to diversify. You're talking about also the earlier segment on freeing up internal trade in Canada. But it is tough. Some homogeneous commodities, whether it's oil, liquid natural gas, things of that nature, we might find other markets for quickly. Potash, for example. But particular products that are part of the integrated North American production system and framework, like in the auto sector, those may take a lot longer to find another market that would readily take that on.
I do want to ask you about imports as well, because we saw a bump in Canada on the import side as well. Do we know what was included in that?
Well, on the import side, again, it was increases in aircraft transportation, motor vehicles, and parts. We're doing the same thing. We're also seeing some of that sort of build up preemptively to basically avoid those additional costs when tariffs will likely come on.
Okay, so we wait for some more clarification on what gets included in the broader banner, and then we see what happens, I guess, a month from now, if not before. Tony Stillo, good to have you. Thank you for sharing some of your time with us.